Innovation, British High Commission. Rama Subramaniam, co-founder and managing partner, Anku Capital. Mr. Prashant Prakash, founding partner, Axel Partners, India Limited. And we'll have to moderate the session, Mr. Bharat Anand, Khaitan and Company. Bharat. Yeah, he's also. Okay. And we'll have Mr. Vineet Rai, founder Avishka Group, to be with us on the panel. We'll need a chair, okay. Okay. We'll set up a chair.
So we're going to improvise. We're coming up to that hour of the evening where we may need to do some improvisation. But there are, obviously, we've had, great events this morning, and it's great discussions this morning, and it's and throughout the day. And two secular themes are very prominent. I think one secular theme is very clearly that the sophistication of our GPs and the success of the PEVC community has created this demand for raising capital from different sources. And with that, there is a burgeoning pool of domestic capital. And therefore, I think that triangulates into what we might call at least early signs of the dawn of the fund of funds ecosystem within India. And there is no better panel to evaluate where we are and where we might go. So we have Mr. Anand Unnikrishnan, who's managing partner of NIIF. We have Mr. Satya Prakash Singh, who's with SIDBI. Neha Khosla from the British High Commission. And that's on the fund of fund sides of the panel. And then if you look at the actual VCPE funds that are there, you have Rima Subramaniam from Ankur Capital, Prashant Prakash from Axel, and Vineet Rai. None of these actually require an introduction, but before we kick off, I just had some house rules for the panel. Because of the distance, if you don't mind, I'm going to just mention it here. Given time constraints, I'd like to at least address two substantive questions to each of the panelists. And I'd request you to keep your comments to about 4 minutes or so. If anybody wants to add or tag along a response, please feel free to do so. But again, keep your tagged response to about a minute or so, if that's okay. So with that, I think the right place to start would be Mr. Unnikrishnan, with you, if you don't mind. And if you could just help us sort of set the scene in terms of the thematic funds that NIF supports. Your thoughts on the impact ecosystem, and particularly some of the larger international and domestic partnerships that NIF has enjoyed, for example, with IDEA, and some of the multiplier effects that have come about through the participation of NIF in the FoF ecosystem.
Thank you, Bharat. That's a number of questions. So firstly, thank you for having me here. Let me just step back and set the context for why we set up the fund of funds in India. Right? So the reason for NIF to set up the fund of funds employment point of view, so economic includes employment as well. So how many jobs are our managers creating through the portfolio? We look at the environment. So, from decarbonization theme point of view, from a, the net zero point of view, right? Are our managers being able to reduce emissions through their portfolio? That's one thing we look at. And then we also look at ease of living. So more the social impact side of things, right? So are we delivering healthcare in, remote parts of India, for example? Are we creating homes for people who otherwise would not have been able to afford a home? So those are the kind of things we look from an impact point of view. So yeah, that's a sort of general theme. I hope I've answered all of the points that you asked.
Yeah, no, perfectly. Thanks for that, Mr. Unikrishnan. And I think some of the takeaways were, of course, you mentioned the multiplier effect of the impact of NIIF and the partnerships that it's made, but also you spoke about, finding the right team to, to back. And I think in that context, Neha, if I could maybe turn to you. So the UK government has partnered with NIIF as well in terms of, finding funds to deploy for various causes. Can you maybe comment on, how the fund-to-fund sector actually extrapolates this partnership between, and creates intergovernmental support? And what are some of the, general successes or comments or reflections that you have in terms of your exposure, the UK government's exposure to India, and how do we scale that up as an access to a particular capital pool?
Thanks, Bharat. And you've asked really a pertinent question. And first of all, I would like to start by saying thank you to the IVCA team to really have a panel discussion on a fund-of-fund ecosystem. It is, of course, nascent and it is evolving over the past several years now. But there's a lot that is on plate to offer in terms of opportunities for both domestic as well as international capital. So just to give a perspective of the UK government, we have been investing in India over the last 30 years and for about 10 years in close partnership with the government of India. And I can say that perhaps UK is the only country which has partnered with the government of India's institutions which are managing its fund of funds. So the various central government fund of funds. We have partnered with NIIF for Green Growth Equity Fund, with SIDBI on fund of fund for startup, with State Bank of India, which is actually managing UK's own fund of funds called the UK India Development Cooperation Fund. Along with that, more recently, the Self-Reliant India Fund, as well as the more recent Trilateral Development Cooperation Fund, which is the External Affairs Ministry's fund of fund. So, under all of those partnerships, the idea has been to really provide a pioneering kind of support, anchor support from the UK government to de-risk some of the sectors and geographies and identify some of the gaps that can really help build markets across, not only in India, but also globally as well. And coming to your question in terms of what are some of the parameters, of course, there are a few parameters which we have learned over the decade now in terms of, which can drive success or failures. And there are challenges, around it. So one of them is, the first one I would say is the policy framework, which is very important, having the right kind of conducive policy environment to attract international capital into India as well as domestic capital. The second would be to have the right kind of incentives and structures in place. So of course the fund-of-fund ecosystem is there is an additional layer of fees that is associated with it. So how do we really look to minimize that kind of cost and provide some innovative structures to make it more conducive? Then also, partnering with the right kind of fund managers who understand the mandate, really they are able to deliver on some of the economic development agenda items, and bringing the right kind of skills and expertise into the FoF. And lastly, I would say also there is a role of blended finance here, where the government, along with providing the innovative structures and incentives, can also provide soft capital and soft support in terms of the technical assistance, whether it is networking or looking at the policy reforms and how we could enable those, some of them, and unlocking them. In addition to that, providing international best practices and the wider kind of networks and outreach to the global world.
Yeah, No, thanks, Neha. I think, you mentioned blended finance, and I think, the whole blending of what would be, say, donor capital and commercial capital is perhaps, the holy grail where one can talk about providing an impetus to the fund-of-fund sectors. And in that context, Mr. Satya Prakash, if I could turn to you, sir, how do you see blended finance really providing an impetus to this fund-of-fund sector? And are there any examples where you have seen some interesting cap table structures or any successes in terms of, this whole characteristics of blended finance?
Thank you, dear. So, as far as the blended finance is concerned, I think it is still in the evolving phase in the country. The, potential which has been measured is approximately 1.3 billion in Indian ecosystem. The fund-of-fund which Government of India promoted and subsequently several state governments are also coming forward. I think this is the best time for blended finance, both in terms of equity and debt. In equity segment, because it combines that basically impact with the return. So, and debt, basically, if you are, using that blended finance to cover up some of the first default losses, I think this will give a big boost to the system. A couple of, blended finance examples which are coming up is Revive Alliance. In fact, they are doing good in this sector. That Samriddhi Health, they are doing good in this area. So I hope, the way the corporates and the international capital, particularly the multilateral and bilateral DFIs, they are coming forward. I think blended finance in India is going to take a good shape going forward. That's what I am looking for.
Vineet, can I also maybe draw you into this discussion on blended finance in terms of, is there sort of a subordination that is taking place, and is there therefore a necessity to accept that, look, if you are bringing blended finance tools into the picture, that there, someone will have to accept a subordinated position on the cap table in terms of return expectations? Is that creating any conflict or any friction in your mind, or is it all smooth, or any other comments that you have?
So I'll also try to champion the impact investing space slightly differently from NIF's position on impact investing. And we will one day convince NIF to actually support Avishkar kind of impact investing as well. Sorry, Anand, taking on you. But let me also actually try to make few comments largely on how I see the state of the funds in India. Not the fund of funds, but the funds in India. I think a lot of people, including our regulator, genuinely believes that we as a sector have reached probably, let's say, 70 percentile of where they want us to be. The reality is we are probably below 40% in where we should be. So we are in the first quartile of our growth, not the third quartile of our growth, in terms of both maturity and understanding. Yes, there are hundreds of fund managers raising funds. There are hundreds of us in this room, 700, I guess, last time I heard the number. We have a fairly evolved Indian Venture Capital Association. We also have India Impact Investor Association. But the reality is the depth of the market in terms of both skills, the kind of exits that we have delivered, we have a long distance to go. If you take this into account, and if you take this take into account the fact that we have a large number of first-time fund managers, there is a need for specialized capital that is willing to understand and nurture the sector, especially the fund managers who are coming up, and also crowd in the right kind of commercial capital. Now, the balancing of these two requires some of the funds of funds to have some level of willingness to offer blended finance. Now, there are very different interpretations of blended finance. This is not putting finance and blending it. It's actually about asking for taking risk that allows the commercial capital to walk into other funds. So let's say FCDO is a great example, but I have a fund called ESG First Fund, where KFW has decided to put in $55 million of first loss capital. This is primarily equity capital, so they came in as an LP, put in $55 million, and they are willing to take a subordinated position against any other capital that we raise. The idea is to raise $250 million. This $55 million will continue to wait till we have paid out every capital to the remaining $200 million that walks in, and then only you pay this out. Part of this is because the fund has a mandate that the LP considers important but challenging, and commercial capital will not come in. And I think, therefore, if India has to actually look for grooming fund managers who are investing in different parts of India, who are actually going and creating companies that are in challenging sectors or in strategic sectors, you would require the blended finance initiating. Either it comes from the government or it comes from a combination, government, FCDO, IFC, or managed by institutions like NIF. But the funds of funds with that kind of capital would play a significant role in allowing fund managers to do things that either India considers itself as strategic. And I'll actually go further and say that right now, most of the discussion about fund managers is about local fund managers investing in India. There is also a great opportunity. If you have hundreds of fund managers in this country, why are we not exporting fund management as a capability? And why are fund managers, FOFs, not thinking about putting in capital into those guys who are willing to set up funds for investing in countries that are strategically important for India? I think the FCDO and Government of India partnership probably is the first time you are taking a step like this. But I think there is a fairly significant and important role for blended finance, is not only nurturing what's happening in India, but also to export fund management practices outside India, from India, which I think would also make IFSC, there was a panel on IFSC earlier, I think it will actually make IFSC not just as a passage of capital into India, but for passage of capital from India to outside the world.
No, thanks, Vineet. I think the strategy adopted by Fund of Funds was actually my next question as well. So just moving from blended finance in terms of the strategic thrust of Fund of Funds in India. And I think, Rima, if I could maybe request you to chime in on this, that what is the playbook and how does it vary in terms of Fund of Fund approach in India versus and while there is not exclusively a thematic focus, one could say that there has been a preponderance of a slant on a thematic focus, at least for Fund of Funds in India, versus, say, for example, what happens in terms of diversification or access to a larger pool of managers offshore. Could you just comment on that and how is it different, in terms of comparatively speaking?
I'll actually answer it from a different perspective.
Sure.
Of saying, what is the need for thematic fund of funds in India? Right? Yeah. And if you look at the fact that today there are a lot of sectors in which we could be global leaders. So whether it's in spaces of like agri-tech, climate, EV, or the digital public goods that are getting played out, we can actually build global players. And if we have to look at addressing this, it's not necessarily what other countries are doing, but what could we do better to be able to bring that forward? And if you look at from IP-led innovations, for example, globally, 2% of the GDP goes into into R&D of the GDP. And India, we are at like 0.3% or something like that. And we have to look at how can we create these pools of capital that will help leverage India to move ahead. So we have created that in some spaces like SaaS, for example, that came up. But there's a whole lot of other areas we could build on. And the need for doing that is where we should drive towards, like blended capital has its space. So similarly, we need to have thematic space, fund of funds that get created. And this thematic fund of funds will need to have pools of capital that come from the government. Plus, it needs to involve the industry as well. Because globally, if you look at it, industry contributes 2/3 of the capital towards a lot of innovation. And so it's important that we look at thematic fund of funds which can address not just pulling in government capital, but also looking at how private capital can come into it to create that focus.
Yeah. No, thanks, Rima. I think your points on creating again, the multiplier effect of funds, the ability to then leverage our IP and the thematic basis, resonates completely. And I think, Prashant, thank you for being the patient one on the panel. And I think just, sort of taking off where Rima left us in terms of, having access to capital to be able to deliver some of these advantages. Are there any pools of domestic capital, because we've been talking about, domestic capital formation throughout the day, where there is a requirement for some form of regulatory intervention or regulatory change, where, perhaps that capital is not fully available to be deployed in the fund-of-fund ecosystem. So are there any pools where some regulatory intervention, in your view, is needed to make those capital pools available, and particularly where it's a thematic fund of funds, where logically the regulation should be more facilitative given the social dimension of these investments.
So I'll also talk a little bit on the need for this IP-led. See, as a country, we just don't have enough institutional R&D, right? So there's no corporate R&D, or there's very little corporate R&D that happens in this country. So if you look at any emerging sectors, whether it is climate or deep tech, the biotech spaces, globally, I think institutions, academic institutions, have a lot of IP that is kind of ready for translation, right? So as a country, we have very little of that happening, right? So there is a bigger need if we have to create products in India that have global relevance. The need to bootstrap this kind of IP through startups gains a bigger importance. So I think we have to view impact that we can create globally. And you spoke about SaaS. SaaS is readily monetizable, right? So that's not a big deal. I mean, nobody has to figure out how to build product, how to build software products. But if you have to build IP around, let's say, new molecules and new materials for decarbonization, that's not going to happen with the current model that we have for impact, right? So I think it's a mindset change. And I think we need also institutions. I think BIRAC, for example, is a good example where I think as an institution, they understood that you got to seed some of this IP early and be patient about it. But for every sector, you need institutions that have that kind of capability to assess what is IP, assess what kind of finance will really incubate the IP, and then you have continuum capital for that. So it's really a whole ecosystem that needs to be developed. So blended finance is just a point in time and what you can do, right? So whereas if you have to really look at the sunrise sectors, I think a more strategic approach needs to be taken place. So it's more than regulatory. It's a high-level strategic thinking on seeding such IP, nurturing that IP, and scaling that IP.
Yeah.
All of this needs to happen.
Yeah, and Prashant, you don't mind, but I'm going to ask you a follow-up question to that. But do you think, for example, just in terms of the sources of funds, that enough has been done, or does more need to be done? I suppose to ask a leading question in terms of allowing foundations and all to invest in say fund of funds more freely than perhaps what it is today.
No, I think there's enough. I think corporates also want to through CSR, and there's enough of this other funding that needs to come in. But I don't think anybody understands where to direct it, right? So, and I think this is where maybe, like, for example, agri-tech is an area that I'm currently working closely with NABARD. So we think, having a focused organization that understands agri-tech like NABARD, if they put their mind to it, just like BIRAC, they probably can solve it. And ISRO could do that for space, right? So I think the pools of capital can be better attracted and channelized if you have the right organizations kind of anchoring this.
Bharat, can I just add a comment to what you were saying? So look, let me just change tack a little bit and talk about, the funding ecosystem for the PE and VC, managers, and how FOFs can sort of help in bringing in more funding. So just from order of magnitude, okay, so our pension system invests today nothing into the local AIF industry. The size of our pension systems, if you add the NPS, the EPFO, the exempted trust and all of that, we're talking about roughly $500 billion, right? So $500 billion is what we're talking about. And if you think about some of the larger, global funds, so if you look at the CPPIBs or the CalPERS, that's the kind of capital they have. So we are in the situation where you have a CPPIB, for example, investing heavily into India, into Indian private equity, and maybe a blue-collar worker or a taxi driver in Canada sort of, getting returns from the India growth story, whereas our pensioners don't get any return from the, from the economic growth in India. So is there a way for some regulatory changes for that EPFO money, etc., to come into the private equity ecosystem? Now, when that happens, it's really, I don't think it's reasonable to expect that an organization like EPFO would today have the ability on day one to be able to, pick fund managers out of the 350 active fund managers that we have, right? And that, I think that's where an FOF actually plays a role in helping build a portfolio which is diversified, so relatively, risk is managed appropriately, so relatively low risk, but it's also benefiting from the higher returns. So instead of, getting the 6% or 7% that an EPFO gets, maybe they're targeting somewhere between 15 and 20% from the AIF portfolio, which can, which an FOF can build for them. So I think that is in my mind, that is a low-hanging fruit from a regulatory change point of view, and that is something that will be a game changer for the PEVC ecosystem in India.
Exactly.
Can I
Please,
come,
Mr. Prakash, I can
just,
see
in
your.
fact, just I would like to share one thing.
Yeah.
These EPFO and others, they are ready to invest the fund. In fact, me and Rajat were in a meeting and secretary was chairing that meeting, and a data I would like to quote for the entire audience here. What happened, one of the largest single, LP of the country, he stood up before the secretary and he said, past 20 years we have invested 3,500 crore into the system, and our average return works out to 1.5%. Do you feel that at this rate of return, all we who are sitting here, pension fund, PFO, insurance companies, they should invest into the industry? So that's the question I think all of us should address. They are ready to invest the fund.
Yeah, sure. Vinny, do you want to chime in?
Mr. Singh, I think the challenge that we are faced with is that that LP, that's a large LP, was investing in an unmature ecosystem, and they have taken a risk of being very early and are trying to draw from that experience to a completely changed ecosystem. I mean, fact of the matter is there were not even 30 fund managers or 10 fund managers in 2010. And so you were probably the first investor in the first fund-time fund manager. And the returns, and India has gone through many regulatory changes. We are moving towards a very developed economy. So we cannot really look in the view, we look behind and drive forward. We are looking at an economy that is claiming to be going to be a 3 trillion, going to be a 5 or 10 trillion dollar economy. And therefore, a lot of people have to forget about the speed breakers of the past and look towards the highway of the future. Mr. Gadkari has been making very good highways. We had pothole roads earlier.
So I'll just maybe...
We have shown the same highway now, and we are working together once again to convince the whole system. We are working. I mean, the whole team is working on that. We will bring that money certainly into the system. But Shri, all we have to, be ready for that.
Yeah, and Shri Raman also mentioned that, look, there's a 2.8x return that he's expecting on the 8,000 crores or so that he's, sort of deployed. So hopefully these are positive signs in terms of, what lies ahead. But Mr. Satya Prakash, my next question was actually directed to you, because there are a lot of GPs sitting in the room who are looking at raising capital. And, obviously their foremost question is, what do you look for when you're looking at allocating capital? Are you looking at, past track record, social impact? What is the trade-off between these two, and what has the journey been so far? Any highlights that you'd like to comment?
Thanks, dear. In fact, what Vineet said, I would like to start from that. In fact, you may be knowing that SIDBI, what we claim is that we have seeded the fund managers in the country. And we take pride of that. In fact, SIDBI, when the ecosystem was evolving way back in 2000, we launched our own fund of fund, our own balance sheet, and 2,000 crore we invested. So basically, we seeded the fund managers in the country. What you are talking about, that even we may think to export them. So we are proud, all of them. As far as the fund of fund is concerned, you must be knowing that approximately 43% of our total supported fund, they are the first time fund managers, where we have given the first check to them, and thereafter they have established, and we are proud of all of them. In fact, in our entire process and the experience which we have gained past over 22, 23 years, what we have concluded that it's the fund manager who matters the most for us. Of course, it's not a single criteria that we adopt for selecting a particular fund, but definitely, in fact, a lot of investment goes into the fund manager, and we have seen that if a fund manager is really, having those critical skills, he pivots himself all through the life of the fund and definitely brings the success to us. Other than that, in fact, you may be knowing that we are managing the Government of India fund of funds. So we keep on aligning our strategies and selection based on the government vision and priorities. So, I mean, of course, impact is definitely one of the criteria. And you will be happy to know that more than 1,000 crore have been invested into tier 2, tier 3 cities. That is also a priority from the government. So what happens when we select a particular fund of fund? We see a number of, I mean, criteria. Of course, return is also one of them. Thank you.
Of course. Mr. Unikrishnan, if I could maybe also get you to weigh in on this, particularly in terms of your preference. Is it for established fund managers? You know, are you looking, you know, a bit like SIDBI as to, you know, first-time fund managers as well? How do you evaluate them? And, you know, particularly on risk diversification and concentration, what are some of your thoughts and philosophies in terms of deployment?
Sure. So Bharat, for us, it's very simple. We back established managers and we back what we call emerging managers. And emerging managers could be a first-time manager who's, you know, a team who's spun out from, you know, maybe a bulge bracket firm trying to set up their first fund. We look for experience in the team. So that experience may have been gained, you know, by doing 2 or 3 funds under the same franchise, or that experience could have been gained by working elsewhere and experienced professionals coming together. So roughly we split our portfolio half and half. Half of it, from a quantum point of view, half of it is about established managers, the other half being emerging managers. We also have the ability to anchor new strategies. So, you know, the climate fund that I mentioned before, the one that we've done with FCDO, that is a classic example of how, you know, we were, you know, ahead of the times maybe a little bit. In 2018, when we put in $150 million to say that, you know, let's sponsor a fund that will go into waste management, into electric mobility, into renewable energy, and all of these areas, right? And now we have, in that fund, we have the largest e-mobility business in India. We have the largest biogas plant in South Asia, right? So those are some of the marquee sort of assets that sits in a fund which today at 740 million is the largest single country focused climate strategy anywhere in the emerging markets for sure, possibly in the world. So I think for a good team where we have conviction in the strategy, we can take the early risk. But I think from a portfolio construction point of view, it would be roughly about half and half.
Right. Great. Thank you. So maybe Vineet, I could turn to you for, you know, we heard the story on the deployment side by the FOFs, but what about in terms of your ask when you're actually looking at raising capital? You know, how do you sort of structure and evaluate your ask? And, you know, especially when you're raising money from fund of funds as opposed to other LPs, what are the things that you look out for and what can be improved? Yeah, sure.
Well, I think GPs have only one ask, please give us money. But I think there is, and let's take the example of SIDBI and both NIF, and both are, in my view, excellent examples of very, very strategically thought through processes. And I'll also take the name of SRI fund, which I think has probably one of the fastest access to capital amongst all the fund of funds. So both SRI, SIDBI and NIF have actually excellent processes, as well as have dished out fairly significant amount of capital. I mean, in terms of NIF, probably one of the largest sets of capital one can actually expect in terms of raising a significant amount of capital. So when I, as a fund manager, look at FOF, I think the most important thing that we have been looking at is at Avishkar, we have raised most of our monies internationally till as late as 2017. And once the SIDBI fund of fund came in, it was the first time I actually had an opportunity to go and pitch and raise capital within India. And I think whenever, as India has transformed, so this is also actually times have changed, it was very easy for us to go to a BII or to an IFC and say that I can only raise money outside India. But as times have changed, people were asking us to raise capital from India. And from 90 to 90-10, we have now reached a 50-50 stage. My personal belief is that if you want to change India or transform India, either by strategically investing into new sectors that would bring about serious transformation, as Prashant mentioned, or the themes that Rema mentioned about, or to actually bring about significant scale, specifically in a country that claims to be having ambitions of reaching $10 trillion, we need to really look at and ask ourselves if our fund sizes are really reasonable. I still believe we are very subscale in terms of fund managers. We have people sitting here in this room who are managing 50 crore, 100 crore, 200 crore, 500 crore, 1,000 crore. There are very few who will go into anywhere close to $1 billion. Remember, we have 1.4 billion people. And therefore, if you have to actually really go anywhere to reach a developed stage, the quantum and size of the fund managers' assets under management, and so the FOFs. I mean, I would love to see NIF reach $100 billion and SIDBI managing $100 billion. Given that we have a huge amount of capital lying locked up, probably earning much lower returns than it should be, exactly as you pointed out. So as a fund manager, we would see a significant increase in fund of fund sizes in India, which would also allow us to become scale up and probably do the kind of things that you pointed out that should be done. But there are very few fund managers. There are, of course, significantly large fund managers coming from outside India. But it will be great for Indian capital to actually work for India.
Right. I think you know, one of my concerns is that given the fact that the investment cycle and the contribution cycle is longer when you talk about fund of funds because it's a longer commitment period. Today, we don't have a fund of fund for secondary interests. And that, I think, then impacts the scalability of this sector. So maybe, Prashant, I can request you to chime in on this. Is there time now for a fund of funds for secondaries? What is your thinking on this as we look at, you know, growing the sector?
Yeah, I think this is going beyond the impact and other discussions. I think this is an overall ecosystem issue, right? So we have you know, matured, but still our ability to IPO companies from this generation and give the kind of returns that we can is not going to happen as fast as what we wanted to happen. So the M&A ecosystem is also not the best, right, in our country. So you don't have a lot of corporate M&A that fuels return of capital. So what are you left with? I think secondaries, right? So a lot of us make do with these small secondaries, and you kind of make these secondaries add up to return what you got to return. So that's reality. So if you can, any new vehicle structures that can come up there, I think will really help also solve a lot of money capital return in terms of some of these other, because I think when you have secondary funds, they can start looking at more baskets. They can start looking at more portfolio constructs. So it's rather than just one-off secondaries, right? So once you have a fund structure, there can be a lot more thought through, and there can be mechanisms that will make this more feasible for long-term holding from their perspective, right? So I think there are just less than 3 or 4 secondary funds that are active. Forget fund of funds. So I think it's a big lacune, I would say, in terms of continuum of capital. So it would be great to see some of that happen.
Fantastic, thanks. I think one more aspect that I just wanted to cover, and you know, Rima, maybe if you could weigh in on this. Couple of challenges that at least I have seen. One relates to, or potentially, I appreciate your thoughts. You know, one is in terms of, you know, the whole talent aspect of the fund of fund sector. So are there any particular challenges because of this cascading fee structure, the push for lower fees, you know, that may result in an exodus of talent rather than, you know, talent coming in and towards the FoF sector?
If we had 100 fund of funds in India, which could be, you know, across partly government funded, which could also be through private capital coming, like one of the earlier questions which had about, can we open up the foundations and the CSR activity to come into fund of funds? So you put in guardrails around how that funds would be managed. But if you look at that kind of capital to come in, obviously it'll then attract the best kind of the best folks globally to come and work out here, instead of our managers going out and working. And actually you would have, as a fact, you would be able to get that. So I think ultimately you will need to see that the pool of capital available is higher. And that, I think prima facie, there is enough Indian fund managers who are either working here or outside India, but who can definitely be pulled in. But the paucity of managers today is, I think, because of the paucity of capital, rather than the other way around.
Right. I can see we've got less than a minute on the clock, so I'm just going to ask a very quick question. And we've had 2 sessions on IFSC, so what can be done in terms of improving the impact of IFFC for the fund of funds ecosystem? Maybe if I could trouble Vineet, you or Prashant to maybe just weigh in with very quick comments on that, if you have any.
Well, I think, as I said, if we can look at IFSC not only just for attracting capital into India, but try to actually transform IFSC as potentially taking money outside of India, probably become a full-fledged fund management spot like you have Luxembourg or Singapore. I think right now we are still looking at IFSC as an inward pathway to India, probably trying to reduce competition from Mauritius or other places. I think there is a great opportunity with the IFSC to actually use the place to not only bring money into India, but also take money outside India. And that would require significant work on the regulatory side, which probably is I don't think so. I do think they know about it, but probably it's not the priority at this point.
There's been a recurring theme, I think, throughout the afternoon when we've had the sessions on IFSC. But I think with that, time is up. I thank my panelists for their invaluable inputs and for the audience for being very supportive.